listening to the Millennial's Choice Show, Canada's most trusted podcast on all things real estate, finance, and entrepreneurship. Here's your host, Matthew Ablakan.
What's going on, everybody? Welcome to another episode of the Millennial's Choice Show. I'm your host, Matthew Ablakan. I'm here with my co-host, Danny Ablakan. What's up, Danny?
Hey, what's going on, everyone?
What's going on? Today, we got a special episode for you. We're going to strictly be talking about real estate. We're going to be talking about offers, what goes into an offer, answering some of your frequently asked questions that we get, especially from first-time home buyers. And also, we want to talk about sometimes the structure of the offer and some of the deadlines that you have to meet, what kind of conditions you could put in there, price, deposit, kind of the whole, I guess the logistics behind an offer.
The logistics,
right?
yeah. And I feel like it's important to go through just because people don't really think too much about that until the time actually comes. If you have a good real estate agent or broker that you're working with, they should definitely do some prepping with you beforehand, just so that you're not kind of nervous and get the jitteries when you're actually putting in something in writing. It'll definitely set you guys up for success 100%. So let's go through it.
And the thing is, the offer, like, it's so much better when the buyer actually knows what's going on. And sometimes, like, a lot of realtors, they may not explain certain things and a buyer won't know certain things. And of course, because it's not something they do every day, it's the realtor's job to really go through it with them in detail. But when you guys are on the same page, like, let's say some of our clients, as you know, we do multiple deals with them over the years.
Yeah.
So now, like, in year 11, those same people, like, all right, they know what to expect.
Oh, yeah.
It's pretty straightforward.
Yeah.
But you still have to go explain it to them. But now you're on the same page.
Oh,
so
100%.
Why we want to put out this episode is because, yes, like Danny said, prepare in advance, be ready. That way, when the opportunity presents itself, you're ready to go. And you can always have a mock offer ready. Like I mentioned to you before, like create different offers for different things, condos, real estate, single family real estate, townhomes, whatever it is, pottles, create different kind of offers for them, templates, and just keep them there as an agent. This is for the agents, and then they can just be auto populated.
I've gotten so much good feedback on, like, our mock offers that I send to clients when I first start working with them as buyers. I just get them used to it, get them to ask all the questions they want to ask. That way, you know, once you find the right property that they love, it's very straightforward, and we still go through it with them. But I find you don't have to go through it in as much detail because they've already gone through it once before, and they kind of feel like, you know, they already put an offer in, kind of, even though they didn't really. They feel like they have some more experience under their belt. So yeah, let's go through it. I'm excited for this one.
Awesome. Take it from the top. Where do you want to start?
Yeah. So just in general, because people ask me this all the time, they say, so, like, when we put in an offer, how does that work? Like, does the agent have to, like, do they have to get back to us within a certain time? Things like that. Very important questions, honestly. So in the offer, we do put when the offer expires. There's something called irrevocability. So that's just pretty much us telling the seller's real estate agent, hey, this offer is good until 12 o'clock tonight at midnight, let's say.
Yeah, it's basically the expiry date.
It expires at this time, you know? So that's a really good point. So you want to definitely have an agent that coordinates that with the seller's real estate agent. You don't want to just give them like 30 minutes to review an offer or anything like that. There have been agents that have done that with us in the past where they just give us like an hour, which is kind of impossible sometimes because we have to go review the offer.
You might not even see it in your email.
You might not even see it because we might be in a meeting or something, right?
Yeah.
So long story short, when you're submitting an offer, the seller's agent can they'll present it to their landlord, and then their landlord tells them what they want to do. So the question I get asked often is
a landlord or seller.
Or the seller, yes. Yeah. In that case, if it's a lease, it's a landlord. If it's a seller, it's they're doing a sale.
It's a seller.
Yeah. So what happens is they can either accept your offer right out the gate, you know, which is possible. They could decline your offer, or they can do a counter offer, right? So either of those options. I always tell my buyers, good news is you don't ever lose anything when you're submitting an offer, except for your time, of course, to put it together and go through it and things like that.
Yeah.
But you don't lose any money or anything like that if your offer gets rejected or anything like that. So that's something good to keep in mind because people ask us that all the time. But moving now past, did you want to add anything to that? Or
the only thing that I would add is for that is that I've actually experienced certain types of deals where they sometimes it's gone in our favor, sometimes it hasn't. But one of the things to keep in mind, I should say, is as a buyer, let's say actually as a seller, because we don't need to focus on just buyers.
Yeah.
It's, these are expectations for both parties. As a seller, you can't entertain other offers if you've already countered the offer.
Really good point.
And even as a buyer, if you've countered the offer, the only reason I focused on sellers is because you're bound by that property, whereas buyers could be looking at multiple properties. So there's a different kind of flexibility there. But as a seller, let's say a buyer gives you an offer, you counter it and you change that time that it expires because now some time has passed, and you extend it because that's normal, and you give it back to the buyers. You can't entertain offers from other buyers until that offer has either been rejected by the buyer or it expires.
Yep. Or accepted.
Yeah. Well, if it's accepted, you're not going to be entertaining.
Oh
offers.
yeah, you can entertain the offers. Yeah, then it's done.
Yeah.
Yeah.
So the point is, you need to be aware of the timelines as a seller, because there have been instances where you counter I've countered an offer, and then all of a sudden, an agent sends me a better offer. Now, these were like in the earlier days of my career, where there wasn't like broker bay. Your office had to notify all the parties of, this was before Millennial choice, all the parties that there was an offer that wasn't done, things like that.
Okay.
And so we got another offer from someone else, and it was better.
Wow.
And it wasn't better by much, but it was better.
And you guys had to wait to hear back from the buyer.
Exactly.
Got it.
Yeah.
And I just thought about something too when you were saying that. People ask us, and this is another really good question, where they say, could we put and submit offers on multiple different properties at the same time? And the answer is yes, you can, but we don't recommend it. The reason why, obviously, I think, is if you submit multiple offers on multiple different properties, there is a chance where they might accept two offers for two different properties, right?
So this whole idea of submitting multiple offers on multiple different properties from buyers comes from situations where, like in February of 2022 or January of 2022, their supply is low and there were multiple offer scenarios happening all around.
Yep.
So every property was getting like 20, 30 offers.
Yep.
And that means one buyer would get it, the other 29 buyers wouldn't. So buyers, in order to increase their chances of getting something, they would actually submit multiple offers to different properties.
Yep.
By some agents. Some agents don't like doing it. I don't like doing it either. To me, it's like, you like all those houses like that? Like, I don't get it. You're willing to move in every single one of those houses. Like, which one do you want? Let's put our best foot forward and let's try to get it.
Exactly.
That's how I go about it.
That's also what I recommend too, because I don't know. I just find like people shouldn't be so wishy-washy in terms of the house they're getting, especially when you're spending a lot of money, right? Like, you should actually love the house, right? I definitely don't want to, buy it and then later, have some buyer remorse and be like, oh, I don't like this house, and we only did that because we wanted to increase our odds, right? So just moving forward past that, I just wanted to put that out there because people have asked me that, right? Absolutely. I don't recommend it though, but moving forward, when it comes to the offer, there's some main key components that make it up. So of course,
let's talk about price.
Let's talk about price, the biggest thing. So what you're offering, right? When it comes to the price, people have asked me, like, is this something that can be changed later down the road when you're doing the offer? So long story short, if you put in, let's say, an offer for $1 million on a house and the seller changes it, they can change it. They can actually do a counter offer and change the price and cross it out and, let's say, put $950,000. Yeah. And then as a result, they'll send it back to you. Then the ball's in your court. You can change the price again if you'd like, or if you want to proceed with the price and maybe change other things, you can leave that. You can leave it at $950 in that example and maybe change the closing date, which we'll talk about next.
Right.
So yeah, you can change that price. Again, there is a lot of negotiations that happens with the real estate agents. A really good agent will justify to the seller's agent why they're going in with this price, usually with recently sold comparables, which is pretty much like you pull up the listings for houses that have sold recently in that area or on that street and kind of justify why you're going with the price you're going with, saying things like, hey, this other house sold for 1.1. We understand that was more renovated. And so as a result, we want to give you $1 million, even though you're asking for 1.1, something like that. Anything you want to add to the price?
So just a story about the price. So I was buying a property for myself. I bought it, but when I was making the offer, I offered, I think I offered 500K or 475.
Okay.
And then they countered at like 515, but we had to have a meeting prior to that with the sellers.
Okay.
I met with the sellers. They countered at 515. They were asking 599.
Okay.
So anyway, we settled on 515. But during due diligence, something didn't come up as they kind of like almost guaranteed. You know what? Not the sellers, more so their agent was kind of guaranteeing.
Okay.
And that kind of backfired on them based on the words he was using. So now I used it as a thing to negotiate, as a tool in my arsenal to negotiate. And so that same offer went from 515 after that was agreed upon to 405.
Wait, what?
Yeah.
405?
And I scored the property for 405.
That's a steal.
405 or 410. One or the other.
That's
I never
crazy.
forget. I never remember the exact amounts because there's so much negotiations back and forth.
Yeah.
But 405 or 410, not more than that.
That's insane, dude.
I know.
And just on that point.
Meaning it could be changed at any time.
Yeah. And just on that point, to build on that as well, too, which we will talk about later on in this episode. If you do have, let's say, a home inspection condition in there, and let's say you go do the home inspection.
Let's talk about that after.
Okay, cool. Let's leave that for there.
Let's move on to deposit and closing.
All right,
date.
cool. Yeah.
Yeah, so deposit.
So deposit, guys, there is a lot of confusion or miscommunication about deposits, and it's very important that you understand what a deposit is. So
Maybe you got to look into the camera for this one.
So guys, a deposit makes up your down payment, okay? But it's not your full down payment. A deposit is a show of good faith to the sellers, showing them that you are serious and that you have some skin in the game. Remember that. It's not your full down payment. So keep that in mind. Thanks for that. We did have to look in the camera for that because there is so much confusion, and it's very important that this gets clarified.
But there's, the realtors are confused. The mortgage agents are not that confused, but the realtors are confused.
Yeah.
That's the reason that this happens. But what you have to understand, just simplify it. What's the meaning of the word deposit? So how I like to understand things is give me real life examples.
Yeah.
When you do when you book a renovation job from a contractor, you have to give a deposit. If you own a business and you order marketing services, you usually pay a deposit. You want to order a sign, you pay a deposit. You want to put your name on a wait list for a particular vehicle, you usually give a $500 deposit.
Yep.
Teslas, you want to get one of the, Teslas that aren't out yet, the Cybertruck, whatever, you're going to put a deposit in.
Yeah.
That's not the down payment for your car. That's not a down payment for the order you're making for the marketing services. It's just a show of good faith saying that you're going to complete this transaction when the time comes. And sometimes you could get your deposit back. Sometimes you can't. And the only time in real estate where you really can't get your deposit is if you sign off on the deal, both parties agree to it. There are no more conditions that will allow you to back out of the deal, which we'll talk about.
Yep.
And then, now you're a day away from closing the deal, and then you don't close the deal. You don't get financing or something happens. You just don't close the deal, and it's in your control to close the deal, but you don't. And as a result, the seller keeps your deposit.
Yep.
That's been proven in court. They don't give back the deposit because it's a show of good faith that's saying you're going to close the deal.
Exactly.
If you don't close the deal, they keep it. Now, during times where there's conditions, we'll talk about that later, where you put a financing condition in place or a home inspection, you change your mind, or not you change your mind, but you go to the bank and you're no longer qualified, or you're not qualified, you never went beforehand. You do a home inspection and there's major problems with the house. Now you want to back out of the offer and you choose to back out of the offer, you get your deposit back. What's important to understand is that deposits are very important. The moment the deal is accepted by both parties, the deposit must be provided within 24 hours of that accepted offer, whether it's a Saturday, a Sunday, a Monday, it doesn't matter. 24 hours. Unless you stipulate in the offer that it's during business days or banking days or whatever the case may be.
Yeah. So you have to have that money readily available. And deposits these days, let's say, for example, you're buying something that's $1 million. You can't give a $5,000 deposit. It's not how it works. That's way too low.
50,000 is like the starting point.
You have to give like 50 grand. Yeah. If it's a condo, it's on the lower side. You could get away with maybe doing 40. But again, you can't give like 5 or 10 because people have asked, right? Like, oh, like 5,000 I have, that's fine. But no, like they just won't take you seriously. Because think about it this way, guys. if let's say something goes south and you can't close your deal, right? And from the time you got the offer accepted in the market and till closing date and your market's gone down, all you have to do is lose your $5,000 deposit and you kind of get yourself out of the deal, right? Which you can get sued for as well too if those guys want to take you to court, but you will lose your $5,000. The sellers don't want to risk losing just $5,000. They want to actually get more from you. So that's why having a bigger deposit is a really good show of faith, and showing them like, listen, I have a lot more skin in the game. I'm very serious about this. I'm actually going to go and close.
Yeah.
Right.
Like if you were a seller, you'd obviously want that buyer to have more skin in the game, especially once a deal goes firm, meaning there are no conditions. You can't back out of it anymore. You want the buyer to have skin in the game. Also, just talk to your realtor. If you can't move the money in time, but you could get a small deposit in, you can always add to the offer, hey, we're giving you 10 grand now, but then in 30 days, we're going to give you another 10 grand.
Whatever it is.
You can add, there's a clause that we can use as realtors that says the buyer to pay a further deposit of by this date. So if you have money locked in or into an account that's not going to be freed up for another 5 business days, if you're bringing money overseas, if you have a gift from your parents and they got to do something, if you got to sell some stocks or whatever, that we get so many scenarios that come to us, you can always do that. And at least that way, again, it's a show of good faith to the sellers.
And it's in writing, right? So you can't really like mess around with that. If you say you're going to do it, then you have to do it. And just to, again, further, that deposit will make up your down payment. So when you went to the bank or if you go to your mortgage broker and they say the total you need to give is $200,000 and your deposit is $50,000, that means towards closing, you have to make up the difference. Yeah. Keep that in mind. So, which we'll get into.
It's not
later.
your down payment.
Yeah, it's not. It makes it up, but it's not your whole down payment.
I think we have a question from Carson.
Yeah.
Yeah, just quickly, Danny. Is it true kind of that because we're in more of a seller's market over the last few years, that is really the reason why these deposits have to be so high, right? Because if it was a buyer's market, maybe you could get away with doing a little bit less of a deposit.
Yeah, that's a good question, Carson. It does play a role, I think, for sure. Because think about it this way. If you're selling your house, right, and you have 30 people interested and they put something in writing and put offers in, you're going to want the most money up front as a deposit, right? That's going to play a role in the stronger offer. So, for example, if someone's offering you $1 million and their deposit's $50,000 and another person's offering $1 million and they're offering a deposit of $100,000, if everything else is the same, as a seller, I would go for the one that is giving me $100,000, right? That's just more security on my end. So to answer your question, it definitely does play a role significantly. If it was a more buyer's market, which in this case, it's not even that bad right now. Like there's multiple offers happening right now, which we'll get into like at a different time. You still need to come in with a higher deposit these days. It's one of those situations where I don't think we're really going to see deposits of $5,000 or $10,000 anymore because the prices have just gone up naturally over time.
So just to touch on that, with pre-construction real estate, a lot of people will say to me, well, why can't we buy a condo in Waterloo with a 5% deposit versus buying a condo in this prime location in Toronto and they have a 20% deposit? Why the difference? Like, what's the catch? I've literally had people just a couple of weeks ago say, what's the catch? Well, there's no catch. You have to understand how pre-construction real estate financing for the builder works and also the timeline of the project. Projects that are launched immediately, they require 20% deposit, period. The reason being is that their construction lenders who will finance the builder will require that from them. That gives them peace of mind that somebody's put a 20% deposit in a deal, right? So they require that. Towards the end of a project cycle, that same project in Toronto as an example, when it's ending in terms of it's almost built now and there's a few units left that the builder has held back, they'll usually do a 5% deposit because the deal is ready. It's going to close very soon.
Yeah, I've seen that.
So they'll incentivize people to get in with 5% deposit. Now, there's pros and cons. The property's probably more expensive by then. There's no time. If you're an investor, you like time. You want to buy something today. It's not going to be ready for 4 years. You don't have to worry about a mortgage. You don't have to worry about tenants or none of that. Now that's not the case. It's going to be ready in 60 days, 90 days. Or some areas like Kitchener-Waterloo, for example, when they first open, the requirements might not be as stringent to somebody like a construction lender, because some of those areas, big lenders don't lend in. Some of those areas, big developers are not there.
Yeah.
So some of these smaller developers or medium-sized developers will go to more alternative routes for financing. And what those lenders will do, because they're alternative lenders, they'll be more flexible on some of the requirements that the builder needs to impose on buyers. And as a result, the builder might not want 20% because it's Waterloo, because it's a bit rural, it's out of the way, whatever. They'll say, we'll do 10% deposit. Again, that should not be the determining factor why you buy something, because what did we just say? Your deposit is not your down payment.
Yeah.
So if you're getting in thinking that's all I can afford, all right, 3 years down the road, now you have to close the deal and you got to put in another 10% to close the deal. You can't say, well, I don't have it. I only the builder wanted 10%. I gave it to him. That's a deposit. It's not your down payment. The builder's not giving you financing. They're not a bank.
No.
So that's the key point that we're trying to get you to understand here.
Huge.
Yeah.
Huge. Thanks for that.
Yeah.
Because a lot of people are so confused when it comes to that stuff, especially like when builders advertise and market, and even real estate agents market only 5% down. Well, guys, that's not your down payment.
It's not down. That's wrong. That's misleading.
It's misleading. Exactly. So it's good that we clarified.
We've seen recently, like when builders canceled an agreement on somebody and then that person goes to the project and poses and they call CBC News and then they take a picture and all that and they bash the builder. Those are the people that didn't understand this. I gave the builder 25 grand.
Yeah.
That's it. I should be able. Okay. Did you talk to a bank before you bought? Did you talk to a mortgage specialist? Did you talk to a mortgage agent, mortgage broker to get qualified for your mortgage? No. So just because you gave a deposit, you're telling the builder that you're going to close the deal and you didn't close the deal. The builder has a right to terminate that and keep your deposit.
And keep the deposit, exactly.
And sue you if they sell the property for less money later, if they have more marketing costs, if they have to hire a whatever, they sue you for all those costs.
Yeah, that's insane.
Yeah.
So let's move on from deposit, but that was really important that we focused on that. Closing date, huge. Yeah. A lot of people ask us, when can we close? I've had people say, can we close next year? And I'm just like, no, that's not how it works. For resale real estate, usually it's within 30 to 90 days. I've seen 120, but usually 30 to 90 days is what I say is on average what you can do for an offer. The reason why that is, and a lot of people don't think about this, if you put an offer and the closing date is, let's say, next year, right? There's so much stuff that could happen between now and next year. The market can significantly decrease or increase, or the seller might not want to wait a year to get their money. That's the biggest factor usually, right? If someone's selling, it's usually because they want to sell, right? And get their money out of their house. And so typically what we find is 30 to 90 days right now, sometimes 120. But anything more than that, very, very it's an outlier. Yeah.
Yeah. I don't think I have anything to add besides try not to book your closing date. On the offer, it's called completion date. Try not to book it on a Friday.
Yeah. You have stories for this, no? Like something's happened in the past?
Yeah, no, I've seen it happen. We haven't gone through it, but on a Friday, it's like, for example, it has to be completed by 6 p.m. That's what the offer says. This transaction must be completed by 6 p.m. The land registry office closes at 5. And in order for title to transfer, your lawyer has to go through the motions with the land registry office, and that closes at 5. So on the day of closing, there's a lot of pressure on lawyers, on buyers and sellers, where the banks need to get the money over to the buyer's lawyer. From the buyer's lawyer, so now all the financing stuff has to have been done right by your broker or by the mortgage specialist or by the bank. They have to send it over to the lawyer. Then the lawyer has to now process all that, get it over to the seller's lawyer. Seller's lawyer has to process all of that, figure it out, do what they got to do. Then the buyer has to register official, the title to you as a buyer. The buyer's lawyer has to do that.
That's the ownership, just to be clear.
Yeah, so title's ownership. Yeah. And so that when that happens, there's a lot of time that passes. And a lot of the times the deal doesn't close on that day. We just closed our units at 4:30 ESA. They closed a day later.
Yeah.
My units and your unit.
Yeah.
That happened. So it's very possible. So now picture this as a first-time home buyer, not as an investor, as a first-time home buyer. You buy, you're ready to move. And a lot of people they want to move that same night.
Yeah, the night of. Yeah.
They have a truck, or as a seller, they are ready to close their other deal. They bought something else, so there's a 3-way deal happening.
Yeah.
And they have a truck and it's full, and they got to move out of that house by 6 p.m. and go to the new house and do all that stuff. And, you know, you can imagine that if it doesn't close on the Friday and it's going to close on Monday just because of a time issue.
Yeah.
Well, now your truck is full. Those other sellers are waiting. You're a seller, you're waiting. The buyer can't close, but the buyer might have packed up their truck and stuff like that.
Yeah.
It's just a little bit silly to do that. So some people say, let's do it on a Friday because then I'm finished work and then we have the whole weekend to move. I get it.
Which makes sense.
Yeah, which makes sense.
In theory, but you shouldn't risk that.
Here's the thing. Yeah. One extra day beforehand, closing on a Thursday, which I like to do, Wednesdays or Thursdays. It's not that big of a deal financially. Like, you should just do that and be safer. 100%. Otherwise, you're going to close on a Monday and you won't be doing anything for 5 days anyway.
Exactly.
You might as well just do it a day or two before.
I agree 100%.
That's all I would add there.
Yeah, same for the completion date. That's perfect. And the next thing we could talk about is clauses. Let's go into the clauses.
Just before clauses.
Yeah.
You know, there's a section where, let's say you walk into a home as a buyer or as a seller, same scenario. This is your home, and there's a really nice light fixture in the property, and the buyer walks in. Oh, that light fixture is beautiful. I like that light fixture. Is that included? Maybe it's included. Fine. But as a seller, you don't want to sell that light fixture. That's your light fixture. You're going to take it with you. So there's a section in the offer called, you know, fixtures excluded, and then also chattels included.
Yep.
And then also rental items. Are there any rental items like a hot water tank? So important. A furnace could be a rental item. There's a lot of things. A water filtration system could be a rental
many things.
item. So those three areas, what's in chattels, what are included chattels, like, you know, appliances, what's included, fixtures excluded. There's a light fixture you want to exclude, or an appliance you want to exclude, or whatever the case may be.
Yeah.
So it depends on the situation. Consult with the lawyer for that. But then your rental items, if you're a seller and you don't include that hot water tank is a rental item and the buyer is going to assume it and you're not clear about that, on closing, the buyer will say, I'm not assuming that. I'm not taking over that rental.
Because I never knew about it.
I never knew about it.
Yeah.
It would have factored into my decision making and the price I would offer you.
Yeah.
And now the seller has to pay out that water tank, and the buyer just gets a free and
they
clear
own it.
water tank, and they own it. So you want to be very clear about rental items, about things that are excluded in terms of like light fixtures, appliances, blinds, curtains. You know, I've never experienced it, but I've heard stories of the person who sold their house. The buyer walks in and they took out all the light bulbs were removed.
No way.
All the light bulbs.
The light bulbs.
Yeah.
Or
sometimes if people say, well, the TV's excluded. Okay. Well, what about the TV mount? If there's a mount, these are little things that, you know, shouldn't hold up an offer, but need to be addressed. Otherwise, they could just cause confusion and some problems.
Exactly. The clearer you can be with the offer, the better it'll be for everyone. It'll be easier 100%. Everybody will be on the same page, right? Yeah. Whereas if you don't mention things or you forget, then it's just going to cause more headache down the road. For sure.
Or some light fixtures are really expensive. Like
that too.
Extremely expensive.
Yeah.
Don't assume that they're included.
Yeah, no. You got to see what's included. Usually on the MLS listing, it'll mention like what's included and what's excluded. But yeah, for example,
put it on the offer.
Put on the offer, or else, you know, you could risk being disappointed on closing when you go in and there's no light fixture and you're expecting it, right? Yep. So, yeah, perfect. Let's offer or clauses. Let's go through it. I like this one the most because it plays a huge part in the whole offer process. A lot of people aren't familiar with this, but as a buyer, you're actually the one that's able to, when you're initiating the offer and you're submitting it, you're able to dictate the clauses, right? And all the clauses is pretty much stating, you know, certain conditions in the offer. So for example, there's a really important one that, you know, says you have to pay the rest of the money that you're owed to the seller on closing, you know, minus the deposit. So if you agree to pay them $1 million and you're giving them $100,000 deposit, you agree to give them the other $900,000 on closing. That's huge. You have to have that in there. That's a very basic one. That's in every offer I've ever seen. One other ones that we do is that that the actual offer is conditional. So these are what's called conditional offers. So we were talking about this before, and all it is simply saying that we as the buyers have about 5, let's say, business days after an offer is accepted to go get our mortgage financing. And if it's not satisfactory to us, we have 5 business days after the deal is accepted to cancel a deal and get our deposit back in full. So a lot of people don't know that you're able to do that. You are able to do that. Very important clause. Let's say, for example, if it's a very different kind of situation with the mortgage and you're not really sure what the bank's going to say, it's very unique and you want to see what their underwriting says when you submit it. Once there's an accepted offer, it is good to have for your own protection, right? Did you want to add anything to that one for financing?
Yeah, this is why we say to people, like I get a lot of people that come to us acting like they're the experts, and they say to us, you know, we don't want to do our mortgage financing ahead of time. We want to just start looking. We won't work with you guys. There's a few reasons for that. Number one, we don't know what to look for. We don't know how much you can afford.
Yeah.
You need to know how much you can afford. So you should do a mortgage pre-approval ahead of time. And the second thing is, when you go to make an offer, the more conditions you have in your offer that allow you to back out of the deal, the less the seller will be inclined to accept it. Of course, unless it's the only offer they get.
Yeah.
So as a result, you want to present a really strong offer to sellers. And if you can put a financing condition in there and then scratch it out and say, I already have my financing in place. Like you're obviously confident you've done the right things and you have your financing in place, then a seller can look at that and say, they're fine. They're already financed. That's an offer that stands out to us compared to somebody else who needs the 5 days. And also, most of the time these days, you can't get financing in 5 days.
No.
You won't get an answer from the bank or from a broker or whatever in 5 days. So that's why starting that application process ahead of time, where you have to come up with documents, where you have to not only come up with documents, but provide those documents to the broker, to the mortgage broker, mortgage specialist. They have to input the data, speak to lenders, get back to you with some options. That takes more than 5 days. So doing that process ahead of time enables you to say, when I see the house that I want or the property that I want, I know I can afford it. Let's move forward. Let's put our best foot forward.
You go in there with confidence,
Yeah.
right? And the sellers know that, right? As the real estate agent communicates that to them. In our case, we usually go and we explain to the agent, hey, not only am I the real estate agent, like helping the buyers, I'm also helping them with their own financing because we own our own mortgage brokerage, right? And we're doing it directly. A lot of real estate agents say, oh yeah, we've heard that all the time. But I even go a step further and say, no, just to be clear, I'm the actual person doing the mortgage financing. I'm not saying they're getting it from a bank, because every real estate agent says, oh yeah, they already went to, TD or Scotia.
They're already financed. They're already financed.
We've heard that a million times, but I always, because some real estate agents don't understand it, that we also help people with the financing as well too. So I go a step further and say, no, like I'm actually the broker, the mortgage agent. So they understand, doing the mortgage for them, and it's already done. It's completed. They're going to be approved, without a doubt. So that speaks volumes to them. And there's been scenarios where we've had our client cross out the mortgage financing condition because they were confident we were going to get them approved. It was a done deal pretty much. And there was another offer that also had the same situation, but the difference was I was the mortgage broker helping that buyer as well. And the agent knew that because I made him aware of it. And he even called me back and said, Danny, he's like, I don't know how you guys got this right now, but my seller wants to move forward with yours, even though your buyer's offering a little bit less on the price. He's like, we just feel a lot more comfortable moving forward with yours because you're in control of the financing for the buyer.
There you go.
And we know you want to do the deal.
And that was in a multiple offer scenario.
That was multiple offer. And I was like, wow, that's amazing news. I was, of course, very happy for our buyer because we got the condo she liked. And it just speaks volumes to, the value that, an agent can bring to you as a buyer. So I just wanted to put that out there regarding the financing condition.
Yeah.
Yeah. And then another really similar condition that's conditional is the home inspection condition. So we strongly recommend putting this in if it's like an older home, let's say, and there can be potential problems that can be in the house that you might not be able to visibly see with your own eye. You need to have an expert come in, and they pretty much go through the whole house and see if there's any red flags. And they actually complete a report for you and say, here's what we found with the house. Here's what we think is wrong and what you'll have to do to fix it. And here's how much roughly it might cost you. And that's it. So you have to pay for that, of course, as a buyer. If your offer gets accepted, you have to pay for a home inspector to come in and do it. And they give you that report. Now, at that time, there have been situations where things have come up in the report that you will have to fix as a buyer. And we've actually been able to go back to the seller and say, hey, the home inspector came back, gave us a report, and here's what it says. Now the buyer has to come up with an extra $5,000 to fix this. The buyer doesn't want to fix that. They don't want to pay for it. We want you guys to pay for it as a result and reduce the price. And some sellers say, you know what, that's fair. We'll reduce the price by $5,000, whatever it was, once we give them the report, of course. Or they could say, you know what, we don't feel like we should pay for that. If the buyers want the house, they're going to have to pay for it. Right.
Yeah. So the home inspection can be used as a way to negotiate later on, but it's so important just to know like what's happening with the property. So there's different ways you can go about it. Sometimes sellers will actually do a home inspection prior to listing the property and offer that home inspection report to buyers. I know some buyers say, well, why would we, trust that? The sellers could have just changed it or did something, turned a blind eye to certain things. Yeah, like I get it. But at the same time, you can always put in the offer that the seller has provided a home inspection report and they guarantee it and they stand by it. Yeah. And if anything comes up out of it, like, there could be repercussions. So there's different ways you can go about it depending on the market conditions. But I think it's super important. And those are the two main ones, the financing and the home inspection. I will say, just going back to the financing, I will say the importance of having the financing in there also is to make sure that you can get an appraisal done in time while the offer is still not what's called firm, meaning all conditions have been fulfilled. And the reason that's important is if you overpay for the property, but during those 5 days you order an appraisal and the appraisal comes back and it's showing this is what the value of the property we think is to the bank, then you can go back to the seller's agent and say, look, paid you $1 million. The appraisal came back at $950,000. There's a $50,000 difference. We're not going to proceed with this deal. And I don't think anyone will because, I know appraisals are opinions of value, which means everyone has an opinion. They could be different, but still $950,000 is quite a big spread to $1 million, still $50,000. So you'd want to work with them.
Oh, for sure.
And again, you can use that as a way to negotiate. But that's what I would say you could get done in 5 business days, but you won't get the approval done, mortgage approval done in 5 business days.
No, it takes a lot of time for them to fully approve it. And that means, document review, things like that. It won't happen in 5 days. That's way too fast. Typically it takes about like 20 to 30 days. 20 is if it's rushed, right?
Yeah.
But yeah, that's a really good point on the appraisal. Getting it done within that 5 days. It's good to also have people that work with appraisal companies often because we also help clients with mortgages. So whenever we do help them with that, we have built rapport with these appraisal companies and they're able to, put our clients on a priority and go in sooner, right? And not say, oh, sorry, we have to come in 2 weeks from now, right?
Yeah.
If they're backed up. So it's really good to have those connections as well too.
Yeah. And just the last 2 conditions are quite easy. You mind if I just go through them real quick?
Yeah, let's go through them. So status you're probably going to talk about. And
yeah, you know what? 3. We'll say 3. So one of the main ones with condos is ordering a status certificate. That's just going to tell you what the status of the building is like, what the status of the unit is like in terms of finances, maintenance fees. Are there any lawsuits going on? Is anybody suing the building? It talks about the status. That's why it's called status certificate. So you may want to make sure you review that with your lawyer. And that's very common. And most of the time agents will have, especially in a hot market, the status certificate ordered already. And so potential buyers that come forward before the offer is accepted, they'll even send them the status certificate, review it with your lawyer. And that way you can get rid of that condition in the offer. That's common. Anything you want to add with that?
No, that's perfect.
And then the 2 other conditions I'd like to just mention is, they're not as common, but we do see them. First one is conditional on you obtaining home insurance. It's not that common, but there is a condition that you could put in there, getting the adequate insurance. Sometimes properties don't get insured, and that results maybe you not being able to get a mortgage. Yeah. And as a result, you can't close the deal. So it is important. But it's for everyday properties, it's not common. We don't see that in the offers. And then the final one, and I like this one because I use it in my own offers, not only sometimes with clients, but also with my own purchases, is I don't put a financing condition. I won't put a home inspection condition, but what I'll do is I'll put a lawyer review condition. Yeah. And I won't even put the status certificate condition in if it's a condo. I'll put lawyer review condition. And at that point, it's kind of vague. So if I need to back out of the deal for something related that my lawyer recommends I shouldn't proceed with as a result of that, then I can do that. But what it sends the message to the seller is that, wow, they don't have a financing condition. They don't have this is a little nugget here. They don't have a financing condition. They don't have a home inspection. They don't have a status certificate. They just want to review everything with their lawyer. And they say, that's a good offer. Like, let's go with it.
Yeah, no, it's definitely smart for sure. Because in that time, you can go and get your financing, right? And let's say if you want to order appraisal, you can, right? Within that time period.
Yeah.
So it's definitely a good little strategy. Of course, the seller still have to wait for that conditional time, if it's 5 days, whatever it is. But yeah, it's definitely a good little nugget for sure.
I see it in your eyes. You want to use it now.
Damn it. That's so good. No, awesome, man.
I don't have anything else to add. That's basic. Those are the quote unquote boring details of the offer, but they're so important.
Yeah, that was really good, man. That was really good. I think that's a lot of valuable info for a lot of buyers. Again, if you're a buyer looking to get into the market, definitely find the right people to work with when it comes to putting in an offer. It became Millennial's Choice, and we can help you with every step of the way, from the financing all the way to submitting an offer, getting accepted, and then closing.
Right. That's right. Yeah, and getting you financing, like you said, is so important. So we start that at the beginning of the process, but core pillar is real estate, so that's where we shine the most. Guys, if you've listened to the very end, you got that nugget at the very end, which is so important. But thanks for doing so. We appreciate all of your support, and like and subscribe if you haven't already done so. Share the episode with your family and friends. Leave us a comment, leave us a review if you're listening to this on any one of our podcast outlets. And until next time, we're out.